Welcome back to Real Estate Mindset. Today's video is gonna be absolutely bonkers. Now, the data is in, and today what we're gonna do is our Thursday housing market update. And you guys, this one is gonna be crazy. We have a lot to dig into today. And where we're gonna start out with is we're gonna listen to a brief clip. It's actually a minute and 27 seconds of Jerome Powell speaking and essentially what he said yesterday as it pertains to the housing market. And you need to pay attention to what he's saying because he's specifically saying he's going to crash the housing market. So that's where we're going to start. Now, after that, we're going to take a look at the interest rate poll that I did on my channel. And you guys, when I'm done with this video, I'm going to put out another poll on what direction you think the interest rates are going to go. So please vote on that. Now, after the poll, obviously, we're going to go into Fred economic data just to see what the average 30-year fixed rate mortgage is right now. And then after that, you guys, we're going to go in and look at the treasuries, and I'm going to show you how much the 10-year right now has absolutely skyrocketed. Now, after that, I'm going to give you an estimate of where I think the rates are going to go into next week, followed by me accessing my live local MLS or multiple listing service. And I'm going to show you guys multiple clusters of new home builds. I'm going to show you a home in the $300,000 range with a 19% price cut. I'm also going to show you an area in my local housing market where almost every single home has price cutted their house. But I'm also going to show you a comparable in house that I have found that meets my purchasing criteria. So I'm going to show you guys that I found a home well under $120 a square foot, the size that I wanted, the location that I wanted, and it even has a pool. And I'm still not buying. So that's what we're going to go into today, you guys. And real quick, I'm also doing a live Q&A this Sunday, 10 p.m. Central. You guys log in for that. Check out my live Q&A. It's going to be with Lumberjack Landlord and Jeff M. So I'm going to have an investor and I'm going to have a first-time home buyer on my channel, and we're going to answer your questions. So look out for that. Now, before we begin with Jerome Powell's clip, remember, you guys, I'm not a financial advisor. And also remember, I hate saying that. This is my personal YouTube channel, even though my bio is as a realtor, loan officer, and instructor in real estate. I am also a renter. I'm also someone that has had a foreclosure, and I am also an owner of real estate, even though I am choosing to rent right now. But you guys, do me a favor, like this video, subscribe if you haven't already, and comment below. I really appreciate your comments. And that brings me to my next thing. YouTube has changed the way the comment section works on YouTube. So look out for that. And I believe they've done that because of all of the bots. But regardless, you guys, let's get started. Take a listen to what Jerome Powell said yesterday. And again, it's a minute and 27 seconds. I'm going to let the entire clip portion of what I want you to hear play out, and then we'll discuss it. Take a listen.
Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset and what you think it will take to actually get there.
So when I say reset, I'm not looking at a particular specific, set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know, where it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
Okay, guys, so there is no need any longer to try to convince people of what's about to happen. Step one with my channel was sounding the alarm. That is now complete. I'm in the next stage of my channel and next step of my channel now, which is when is it going to be the right time to buy again? And how long will we have to purchase property that have lowered drastically in price? And that's really what I'm going to be looking at moving forward, y'all. But again, what I'm trying to tell you is we don't need to guess what's going to happen anymore because the Federal Reserve Chairman Jerome Powell is specifically telling us that there is going to be pain and a reset in the housing market. So don't be surprised. And it's especially shocking to me that even though we have officials specifically telling us not to buy right now, the housing market's going to reset, people still aren't listening. Why? I don't get it. Why aren't people listening? Jerome Powell just said it. That's where I want to start it now. Let's go into my poll that I sent out last week about what direction the mortgage interest rates were going. Take a look. All right, guys, here's the poll. And I'm going to do a poll just as soon as I send out this video so that it's actually fresh. This is only 2 days old. We had 4.2 thousand votes. And basically I asked, according to Fred, will Thursday's updated 30-year fixed rate be lower than the current average of 6.02? I forgot to hit read more, but I said that interest rates would be higher. I suspected to 6.10. So we're about to see that right now. But look at out of the 4.2 thousand people that voted, 95% of people agreed with me that today's interest rates would be higher. So let's take a look at the rates right now. All right, guys. So here's Fred. This is the 30-year fixed rate mortgage average in the United States. I'm going to go to the 5-year view here. And as you guys can see, the rates went way higher than I thought this week. The rates right now, the average interest rate went up. This is insane. Went up to 6.29%. You guys, look at this massive skyrocketing again. So look, it went down and you know what? And let me talk about this right here, this downward trend right here. So I said essentially that the Fed pivoted, and I got some blowback on my comments like, oh, the Fed, didn't pivot. It was just, there's a lot of money in the economy. And the thing is, my response to that is where do you think the trillions of dollars came? And even though maybe the Federal Reserve didn't technically pivot, in my mind, they allowed this drop in interest rates to happen. As a result of this drop of interest rates, actually a lot of demand went back into the market and a whole bunch of people purchased. Prices actually went up and inventory went down. So it kicked the can down the curb. And now look at all these people that bought right here. Look at now interest rates are skyrocketing. Probably more than likely what's going to happen is prices are going to drop. So week to week, we went up 27 basis points. So last week we were at 6.02. Now we're at 6.29. That represents a 2.7% decrease in purchasing power. All right, 2.7% purchasing power equals a 27 basis point adjustment. Okay. But regardless, you guys can clearly see as well that this is definitely skyrocketing up. It is no surprise now. Everyone should know what the Federal Reserve is going to do, because we don't have to guess. Well, unless, obviously a black swan event happens or something of that nature. But you guys, we don't have to guess anymore. We already know what's going to happen because they told us what's going to happen, because it has to happen, right? It has to happen. To be honest, you guys, we need a reset. We need more balance in our housing market. But, in my opinion, it didn't need to happen this way. It didn't need to happen with the rug pull. There's going to be a lot of, unfortunately, even though I know I'm going to become a winner, I know you guys are going to become a winner. In order for that to happen, a lot of people have to suffer. That's the unfortunate part about everything. And that's why at first, when I started doing this channel, it was all alarm ringing, like stop. And you guys, here's the thing. I've got a tremendous amount of comments and I really appreciate you guys commenting on this. But there have been several people that have told me, Travis, as a result of watching your show, we canceled our contract. 1 month went by, the house went down 80,000, 100,000, 120,000. So I already know that people that are watching this channel are fixing to win in the next go around. But what I want to do now is I want you guys to look at the 10-year. It is absolutely bonkers what the 10-year is at right now. Take a look. All right, guys. So this is as of 2:08 p.m. today, the 22nd. Now, as you can see, look at the 10-year. The 10-year is insane, you guys. This is going to kill the housing market. This is going to destroy the housing market, and it's going to hurt the stock market as well. But we're at 3.71. Yesterday, we were at like 3.52. This skyrocketed from yesterday into today about 20-ish basis points. It's insane, you guys. So, based on just the 10-year, I'm obviously going to say that next week's interest rates are going to go up. And I suspect that they will actually go up a decent amount. I'm going to say they're going to go up another, let's say 20 basis points. So I'm going to go 20 basis points increase next week. I'm going to guess that the rates are going to be an average of 6.49%. So I'm going to shoot that poll out. Let me know what you think. But again, what I want you to remember is even though that Fred says the average interest rate is 6.29, most normal people are getting rates 50 to 75 basis points higher than that. So are people getting a 7% right now? Right? Do you guys remember me saying that we're going to see 7% in September? You guys, it's going to be next week. We're seeing people right now that are going to get 7%. 7% is going to be the new normal. All right. And that's going to be devastating to prices, which is good news for people like us that are standing on the sidelines waiting to buy again. Now, what I want to do is access my local MLS and I want to show you guys some live data. I want to show you guys some live trends so that you can see what's happening in my local housing market. And remember about Texas, I believe Texas is still the #2 state of migration and the #1 state of new construction. So the good thing about my area is I feel like I'm in the future. I feel like Houston right now is experiencing so many things that other metro areas are just now starting. So take a look at what I found right now. Okay, guys, here's my local MLS, and here's Houston right here. I go north of Houston. If you've been following my channel, you know I have only stuck with one metro area, you guys. And obviously the reason why I'm doing that is so that we get familiar with just one metro area and we can kind of just look at one area and figure out what's happening. And then you can take that knowledge and really just, use it wherever you want. But here's our area. It's basically Kingwood, Atascocita, Humble, New Caney, Porter, just this whole little area right here. But mainly it's been Kingwood. So the first thing is I want to do is I want to show you a house that I found at a $300,000 price point that has a 19% price reduction. And then I want to ask you guys if you think it's a good deal. All right, so take a look at this house at $253,000. You guys are going to be blown away by this because I get a lot of people, oh, show me a $400,000 house with a 19% price deduction. I'm going to do better than that. I'm going to show you a $315,000 house with a 19% price deduction. As you can see here, a recent price deduction went from $315,000 to $253,000. That is a massive price deduction, you guys. That is a huge one. That is 19%. But I want to show you one thing better. Take a look at this. So here's the area right here. And I basically want to show you that everyone that kept their house on the market because they have to sell for some reason, probably have all started cutting their houses. So let's start with this one right here. $25,000 price cut. This comp. Let's look at the next one right here. Another price cut. Look at that. $20,000 price cut. Substantial. Wouldn't you agree? Let's look at another right here. Look at this, another $20,000 price cut right here. And really what I want to show you guys is this is the same pocket. So all of these houses right here are having price cuts. Let's look at one more right now. Oh, look at this one. Look at you guys. So this is a $340,000 house that has a $43,000 price cut. That's over 10%. So all of the haters that has said, Travis, show us big price cuts at lower price houses, you guys, I'm showing you multiple right now in the same area. I don't even have to. And the thing is, guys, I don't have to travel. I could just click on these right here and find crazy deals. But I want to go back to the one I was just showing you with the 19% price deduction. And I want to ask you guys, take a look at this. At first you would say, wow, one from 315 to 253. This is a great deal. This is a great deal. It's down 19%, right, guys? Is this a great deal? But remember, because I have been monitoring my local market, and I have been taking you with that journey with me. I have put a benchmark $120 a square foot before I'll even look at a house. And I want it well under 120 now. I want it $100 a square foot, but whatever. Look at this. We know this is selling for $132 a square foot. So what do we know? We know that that's not a good deal. We know that this house is still overpriced. And that, you guys, is what I'm really trying to explain to you. If you know your local housing market, you're going to know what a great deal is. if someone blind goes in to look at that listing and they see a massive reduction on a $315,000 house of 19%, some people are going to lose their mind and think automatically that it is a great deal, when the reality is it's still a bad deal. They should have went down 30%. It is what it is, you guys. Now, once again, I want to show you all of this new building going on. See this cluster here? This is a massive cluster right here of new builds. Look at this. I mean, Texas is amazing, you guys. I mean, there's inventory coming off the market from resales, but look at this. I mean, I feel like every other day we get another 20 units of housing. Look at this, is all new builds right there. This is going to be a ghost town. I think it's going to be a ghost town. I don't think they're going to be able to sell. Look, another one. Look at this. I showed you guys this last week, but there's even more now. Look at these are all new builds, you guys. And that's just in this little area right here. Okay. If I go over here, look at this. This is all new builds as well. Look at all this. This is all new builds right here. I mean, this is all within a couple miles. So this is really, really, really awesome. But let me show you one other thing, okay? Because I have to control my own emotions. As you guys can probably tell that have been listening to me, I often have to control my emotions. All right, guys. So I want to show you a house that basically I found that hits all of my buy boxes. And I just want you to know that I have to have discipline myself, because look at this. Now, first of all, I didn't want to tell you guys about this last week because I wanted to see if it would sell. This house has stayed on the market for 14 days. Okay. Look at it's priced at $115. I wanted $115, under 120, right? So this hits my buy box. It's the square footage I want. It's the bedrooms and bathrooms. And look at this, you guys. It has a pool. Oh my God. I wanted to buy this house without the pool. The fact that it has a pool at $115 a square foot tells me this is just the beginning. So even though that property does fit my buy box, I think that I can love that property, I think it's a good deal, I'm still not going to buy it. Let me zoom in a little bit here because it's really hard to click this. All right, take a look at this right down the street. This was just listed, I think, yesterday. Okay, so very, very nice house, just listed yesterday. Look at this. $113 a square foot, you guys. And I hope, if you're new to my channel, what I want you to understand, why I'm really going into this so much, is I've been doing these updates for about 4 months. And when I first started doing these updates, I couldn't even find any nasty, junky houses at $120 a square foot. So I've always been, that's been our gauge to see the direction of the housing market. I use $120 a square foot, which is not how you generate value, by the way. I'm just saying it's one of the tools you can use. And that $120 a foot concept has allowed me to explain to you guys, even with these 19% price deductions, it's still not a good deal. And also, I also want you to know you guys should be doing the exact same thing yourself. But here's the other thing. Now what I'm going to do, you guys, is I'm going to log in once again to Lennar, and I'm going to show you some really crazy things that I have noticed. Lennar has cut even more of their inventory. Take a look. But first, take a look at this offer. So when we take a look at these price cuts, you guys, they're also, so at 40,000. Okay. So look at this. So Lennar is so desperate. They're already doing their year-end sale. You guys are already doing their year-end sale. We're not even in Q4 yet. They're doing a year-end sale. Look at this. Receive up to a $40,000 price reduction. Plus, they're going to give you more. Plus a 4.125 rate, blah, blah, blah. It's fixed. Plus, there's more. $10,000 towards closing. You guys, Lennar not only is cutting their prices, okay? They're not only cutting their prices, they're offering you $40,000 off, $10,000 in closing, and to buy your rate down. And it's still too soon to buy. This has only just begun. Do you guys remember me saying Q3 2022 buying incentives were coming back to our market? I got so roasted for saying that, but it's September, isn't it? Aren't those buying incentives that I just pointed out? Isn't this crazy, you guys? And still people don't listen. Okay. Let me just conclude this video. Let me go back onto Lennar's website and take a look at this. All right, here's Lennar. I want you guys to do the same thing. I went to Salt Lake City just because I'm so curious about Salt Lake. It appears to be one of the most overvalued cities. But what I want to show you is this. Okay, so the first one up here is also price cut. It's only $10,000 price cut. But look at, as I scroll down here, look at another price cut, another price cut, Another price cut, another price cut. Look at this. Look at, and this is a good one right here. Look at this. This is what, like 63,000. That's a 63,000. But look at all of their inventory. There's so much of they've price cut almost their entire inventory. Look at price cut, and that's a nice one too. Look, that's over 50,000. That's what, 52,000 price cut. Look at this. Another nice one. Look, move-in ready. Look, under construction. Look at this. Everything is being price cut, you guys. This is insane. This is happening so quickly. Let's go to another metro area. Let me take you to Austin. Look what I found in Austin. Now, I already went to Austin, but look what I found. Different. All right, so here's Austin right here. You guys already remember this one. This is $100,000 off of this property. But what I noticed in Austin is they essentially just started cutting everything. And look at this price cut. Look at this, guys. That's over $150,000 price cut. Second house on here, over $150,000 price cut. This gets me excited. Look at all of their inventory. Look at, before it wasn't all, look at $100,000 off, almost $80,000 off, $80,000 off. Look at this, guys. This is crazy. Look at $100,000 off right here. This is crazy. They're slashing even more property than last time. Look, another one off. Look at this. Look at this. This is insane. Let me go to one more metro area right now, which is Phoenix. Okay, let's click Phoenix here and let's see what we got. So here is Phoenix. Look at the first one's fine. Okay, look at, boom, price cut. And that's a nice price cut. Look at another price cut, another price cut, another price cut, another price cut, another price cut. You see, this is it's getting repetitive, isn't it? Look at this. Almost all of their inventory in Phoenix has been price cut. And I'm not talking about small price cuts. I'm not talking about small price cuts because remember, not only are these houses price cut, there's also a $40,000 price reduction incentive plus $10,000. So here's the question, you guys. How much money is really built into these new houses if they can just shed 100,000, 40,000, 10,000, 50,000 like this? How much profit is really in new houses? And that's why I'm telling you, it's still not time to buy because they have actually a lot more profit than I first realized. They got more room to go down. As we move into kind of the second stage of my channel, which is when to buy, where to buy, how long do we buy, I really think it's important that you ask yourself that same question. When is it going to be time for you to buy? Now, you guys know that I don't plan on even touching anything and purchasing until at the soonest February of 2023. Now, I plan on preparing, which is loan qualification, getting all my paperwork crap out of the way in November of this year. I'll take you through that. But the soonest I'm going to purchase is in 2023 in February. Now, the other question is how long will we have buying opportunity? I'm saying, I don't know. Okay. I think it's possible. Well, first of all, there's elections in 2024. The Fed will pivot in probably the end of 2023. So I know there's going to be a pivot. And I also know that it is likely that there will be more government intervention and there's going to be institutional investors. So I don't know, I don't know that we're going to have as good a deals in 2024 as we can find in 2023. That may be subject to change because the foreclosure wave hasn't even hit yet. There's so many things that haven't even hit yet. But the other question is also, where do I buy? And I hope you guys are using resources that I'm linking like Redfin and Zillow to figure out, can you move to a different metro area that will have a stronger price correction? Because here's the thing. I believe as soon as the Fed pivots, depending on the state of the world economy, because the entire world's messed up right now, unlike 2008, by the way. And by the way, in 2008, when the government came to bail us out, the world could absorb some of our pain. They could purchase bonds and mortgage-backed securities from us back in 2008, 2009, and 2010. The difference this time around is the entire world is all messed up. And also last time, it was predominantly a financial crisis in residential mortgage lending, okay? Right now, we have an everything bubble. Everything is overvalued. So I don't know what's going to happen exactly, but I know it's going to crash and it's going to crash hard. And I expect it to crash fast, as I have been saying to you guys. But obviously, I'm going to take you through that journey with me. Now, you guys, I know this was a long video, so if you made it through the whole thing, do me a favor, comment below. Let me know what value you got from it. Please let me know what I should be talking about because I want to start helping. I don't want to stay in the problem. I want to stay out of it. Comment below. Let me know the value. No, other than that, you guys, I really appreciate you watching this video. And if you're out there investing in real estate, you already know I wish you luck. And I hope you win.